Why is demand of labor so important to jumpstart our fear of inflation?
Is there a way to estimate how long this inflation will last?
So our view is near term, we see significant upside risk.
The problem starts with the fact that inflation is misdefined. The right way to think about it is every single product, service, or asset has an inflation coefficient. And the inflationary coefficient, right, that's the rate at which the price will change as I pump money into the money system, as I pump fiat. Right. And so the coefficients vary, and they're a function of the scarcity of the asset, and the demand for the asset, the information content of the asset, the material cost or the variable cost of the asset, and then the modularity of the asset. If I can stamp out the asset 1,000,000 times out of a factory, it's going to be less inflationary because the fixed cost is higher and the variable cost is lower. Cell phones, mobile phones will not be inflationary because everything's in the fab. Software will not be inflationary because there's no variable cost. Streaming music on Amazon Music or Apple Music will not be inflationary because I can stream it 1 billion times. A Picasso will be inflationary because there's only 20, 50, 100. Right. The best, 5 acres of beachfront property in the middle of Miami Beach will be inflationary to the extent people want Miami Beach. 5 acres in Ohio will not be inflationary because there's a lot of land in the world. The only land people want is in the middle of New York, the middle of London, the Hamptons, Miami Beach, the middle of LA, the middle of San Francisco, the middle of Tokyo. You fly across this country and look down, there's enough land to park 10 billion people on 5 acres each. 200 years ago, people thought they had to bleed George Washington to death to save his life. And everybody agreed on it. The whole point of paradigm shifts, right? Is everybody agreed that the sun revolved around the earth. Everybody agreed the world was flat. Everybody agreed that humans would never fly. I mean, everybody agrees on stuff until they realize that they're just utterly and totally and horrifically wrong. And so in this particular case, I blow a bunch of liquidity into the system. Let's say there's $50 trillion worth of energy, like pick a number, any number, and I blow $10 trillion worth of money in the system. And so there's still 50 trillion worth of energy, but now the money is diluted by 20%, right? So if I have a product and I can measure the pure energy content of the product, then if it's 100% pure energy, the price has got to go up by 20% if I expand the money supply by 20%, assuming it's completely liquid and in demand. What's an example of that? Like maybe a bond. A pure financial instrument, something that is tangible and you cannot produce it with any less energy. This is why proof of work and Bitcoin is so important. If it takes me a tangible amount of energy to produce that thing, then its inflation coefficient is going to be like 100%. And on the other hand, the cost to produce a streaming YouTube video, is going to be the energy content is 1% of the value added or the value in use, and 99% of the value in use is information, but not and non-scarce information. So it's got a variable cost of 1%. An iPhone's got a variable cost of 30, 35, 40%. Right? Everything's got a different variable cost. Gold's got a much higher variable cost, right? Because it's holding its energy. When you look at all these things, you'll be able to calculate different inflation coefficients and therefore different inflation rates across an array of thousands of things. It'll be different inflation rates in New York City, Manhattan, versus farmland in Kansas. It'll be different. Right. So you can't say, oh, this asset class. There'll be different inflation rates on different stocks, right? Because it'll be a function of you notice if the cash flows are likely to continue from the stock, right, subject to or less affected by inflation, then it's going to go up. I think that the pernicious mistake everybody makes is they don't really think about energy density and information density of their products, services, and assets. They're not applying conservation of energy. If the law of conservation of energy applies, that when I increase the money supply by 20%, and if the energy is constant, right, then all the numbers have to change. And if they didn't change on the deflationary products, they must have changed more on something else. So you can't very well be printing 10% more money and not have the inflation. It's just we're choosing to pick just 1% of the things that are inflated, the deflationary assets. We put them in a bucket, and it's almost too easy. If I get to throw out all assets, all real estate, all stocks, all bonds, and then I get to throw out energy, and then I get to throw away food. Well, how could you possibly generate inflation?
Right.
Because you could print 100 gazillion trillion billion dollars, and the cost of free streaming Twitter and YouTube is not going up. So bottom line is inflation is, there's no such thing as a free lunch, but the inflation that's being reported is an irrelevant metric. I call it's a metaphysical metric that's been artificially defined in order to provide some comfort, and it's working. The great majority of people, not only do they not think they don't think there's inflation. You literally have politicians lamenting that they can't create inflation and how important it is to create inflation, even as they're inflating every scarce asset on earth to the point where no one can afford. What's the definition of scarce, right? Maybe the definition of scarce is that it has high energy value, because if I could stamp out 1 billion trillion of them for the same unit of energy, I must be diluting the energy down, right?
The things that are hard to produce, right? So gold and Bitcoin, they're all inflating. And I would say that it is a lie, right? I'm not sure necessarily about the intentionality. You could argue about that, but it's definitely a lie that CPI is inflation. And it seems like it's being used to cover up this widespread system of theft that is monetary inflation.
I'm not even sure they realize that it is theft or that they're doing it. I'm half convinced that 80% of the people in government don't even realize that the inflation metric is a wrong metric and irrelevant. I'm burning myself to death, and I'm calculating the temperature on the counter 6 feet away. And I guess it's like they're just not feeling the pain.